But let me just set the stage a little bit. This is our due diligence questionnaire. This is the meat of the program. The idea is to make the entrepreneurs a little bit more ready to go the distance in the AngelNV program. And so those of us who are angels know that the due diligence part is the hardest part of the whole process. The listening to pitches is the fun part. Getting down to our 6 or 7 finalists, that's still fun. And then comes the really hard work of doing the due diligence on the companies. And so there is so much that is requested of founders during due diligence that we thought that this bootcamp should really focus on the documents and the questions that you'll be asked in due diligence, just so that you're better prepared for it. With that, Nathaniel, I'm going to let you take it away. Our document is cut into different sections, and Nathaniel's covering corporate and financial. Next week, we'll be covering product, and the week after, we'll be doing sales and marketing.
Awesome. Oh. So hi guys, I'm Nathaniel. I'm a fellow founder. I'm currently in New Zealand taking a bit of let's call it a sabbatical between startups before I come back and build my next thing. But I built startups that failed. I built startups that have the kind of numbers that people would dream about. I have done the AngelNV course, so I've been on the angel side of this group once, and that helped me. Reviewed a bunch of startups and did some due diligence. So that's a little bit about me. I have my background is predominantly technology, but I've actually run people and finance teams as well. So I have a little bit of experience from all kinds of areas that will make hopefully me helpful and relevant for today. I will say this because I think this is really important. Everyone you talk to in startups has different opinions about almost everything. So I may say something today that someone else may contradict tomorrow. I know that doesn't sound super helpful, but I think one of the biggest jobs of founders is being able to, listen to lots of different opinions and then figure out which advice makes sense to them depending on their circumstances. I'm happy to answer questions, happy to give you my perspective. I'm sure that Maggie and maybe even Josh here and anyone else from StartUpNV might jump in at times. I don't have a huge prepared sort of like course material. So I'm going to go through the questions. Maggie, if you could get to our first section, that'd be really helpful. And share some of my thoughts. But I'm very, feel free to raise your hand, to speak up. There's a small group here today. Also, feel free to chuck messages in the chat channel if that's more comfortable for you. I think it's probably going to be more beneficial if people participate and we have a discussion as opposed to me just reading out 35 questions verbatim, right? Yeah, Maggie, which section would you like me to start with?
Okay, so the questionnaire actually starts with the corporate things, but I jumped down to this last box that has kind of extra things that we want you to upload if you have them. Can you even read that? I know the print's really small. Let me see if I can zoom in a bit. Not with this window. So if you have any court injunctions, any sort of criminal convictions, stuff that somebody who's willing to invest in you would want to know about.
Great place to start. I'll be honest, I've never had to deal with any of those. I feel like if you got those to disclose, you're probably not going to get investment. But that is not. I am not a lawyer. That is not a legal opinion. I am not sure, but it doesn't seem good.
But if you have anything to disclose it at the front end because it's going to get found and it could ruin your deal down the line. It's better to be transparent than to have an investor or their team find something that you didn't disclose.
110%. And those things are very scary things I've never had to deal with, so I've got no personal experience. You're not going to make any friends by not disclosing relevant information. Especially some of those things might get you in more trouble. Again, not your lawyer, but yes, don't, disclose what's relevant. Don't ever try to hide anything. It's not really going to make it easier for you. Even if that information sucks to share, sometimes you need to, if for some reason you had something a little bit more serious, but you were still investable, just be upfront with your investor. You want the investor who's going to know that, understand that, and still want to work with you because they think your business is worth it. And again, some of those things may be very. I'm not going to get into the legal. Maggie, feel free to get a lawyer to talk about those issues. I very much hope that we don't have to deal with that too often.
Right. But what has come up in the past is the people who have gone through personal bankruptcy because they've been through a startup before, one that failed and one that ended their having to go through bankruptcy. And that is not uncommon. You shouldn't be worried about that particular thing as long as it was, pretty above board. But other sort of criminal convictions of, white collar crimes, they're probably not going to go over well.
Yeah. And thank you, Maggie, for that context. Because again, I've never dealt with that particular section. It's not come up in anything I've done. I personally, this is my just personal take, and it seems like Maggie has a similar opinion. Just because you've like personally been bankrupt, I wouldn't necessarily consider that a bad thing. If you pivot, if you tell a good story about that, could almost be a good thing, right? Knowing what failure looks like, knowing how to deal with really stressful situations can be a really good skill set in a founding team. I'm not saying that you should go out and try to find a co-founder who's bankrupt, right? But don't be afraid to explain that. A lot of investors, in my experience, want to kind of get to know their founders and want to know the founders know how to handle the situation when it gets tough, because it often does. And that's actually something that could be turned around if messaged right and be a stronger, signal on an application. So yeah, it sounds like this is the first time you guys have seen the DD questionnaire. I will say that AngelNV has a very, very exhaustive questionnaire. This is probably one of the more rigorous ones out there. That might seem daunting at first, and I would recommend taking it seriously, but realizing you don't necessarily have to have answers for everything. And hopefully today we can start giving you ideas of things that are, better or worse, or why certain questions are getting asked. Let's say it was things that are more relevant to spend time on versus things that are less relevant. Again, of course, what's relevant to me may not be relevant to someone else. So that's good. But I do think this is important. I think this process and the pitching process are super relevant and super important because at the time you do them, when you have like a startup with nothing, it feels so onerous and it feels like trying to climb a giant mountain and you're just trying to like get over the next hill. But it really helps refine you as founders and as leaders to think about, what should my company be? What should it have? Like, what are the questions that investors are going to ask? What are all the things I have to start thinking about? So it does seem like a lot, and it is. But it's also really, it's almost like a cheat sheet on how to build a business in some senses. Like, it helps you really understand what investors are going to want to see. But also don't expect that you're going to, you have to be perfect at everything. I don't think I've ever seen any company ever achieve great, perfect scores all the way through. The point of this is to give the investors a really good understanding of the strengths and weaknesses of a business. With that said, and again, please, so there's a question on there on the chat. So yeah, please feel free to ask questions in the chat or raise your hands as we're doing this. Tanya asks, how do you check if previous investors are SEC compliant? I don't know. Does anyone here have any experience checking if investors are SEC compliant?
Yes, I'll kind of give some credence here. So there's not necessarily a way. I mean, you could order a background check. By the way, for way of background in terms of giving credibility to what I'm about to say, in the next minute or so, I did underwriting for. I was an investment banker for 3 years, and I essentially did. I was a vice president of underwriting for a very large middle market firm, and we were primarily involved in private securities and private companies. That being said, in terms of how you'd be able to check to see if your founders are SEC compliant, you could literally order a background check through various vendors that can do that. Or you can simply just make it very easy, and this is the way you do it. This is the way most financial institutions, including investment banks that raise capital for companies, do it. You basically have a form. You fill out questions such as the ones that was shown in the prior slides. For example, if you have basically a form that asks the founders, have you committed any bad acts and then et cetera, fill this question out. Have you been convicted of any misdemeanors and securities? That also disqualifies you. In the past, I believe 2 to 3 years. I could don't quote me on the number of years, but that being said, there's all these questions you want to ask them. Another question is obviously, have you committed any felonies? Doesn't matter if it's securities related. That can be disqualifying if it's in the past 5 years, or maybe 10. Again, the timeline is a little bit funky on my end, but nevertheless, these are some questions basically that you want to ask your co-founders when you are putting your co-founder team together, and then make sure that they sign it, and if possible, swear an affidavit for the document, and so that document and is sort of given it some credence. Anyway, I took up a lot of time. That's the best way to do it. Just wanted to give you guys a little bit of a lesson there.
Awesome. And Maggie, or whoever, you're still sharing your screen, so we can see everything and see the whole desktop.
Do you? I was trying to share, make the word window bigger. But here is the thing. If you need to know whether they are accredited investors or not, a lot of them are just going to self-certify that they are, and you kind of have to believe them until you have to prove that they are. In other cases, some funds will make people upload copies of either their brokerage accounts or have their CPA attest to the fact that they have the required assets. That's another way to do it.
Apologies. I think I completely got the question wrong. I thought it was just talking about co-founders, not investors. Yes, Maggie is absolutely correct with respect to accredited investors as well.
Yeah.
Nevertheless, great information.
Sorry about that.
Questions, please.
And I think this also begins one of my first most important lessons. There are lots of really smart people in this room. I have experience. Like, I'm very happy to be here, but I will not compete with someone who's done underwriting for years at a company, like in certain matters. They'll be way better. Yeah, don't overthink things. There are a lot of things here that you can answer. Don't overthink things. If the due diligence teams want more detail about something, they will ask. I don't think I've ever, it's not something this particular question is definitely something that's been, I think we had a really good, interesting discussion. It's not the thing that I think is going to get you invested, right? Like, I think do your best. And you can always say, available upon request or something for some of these more nitty gritty things where like, I wouldn't go out my way and like call up all my investors to date. That's in day one. Right. Like, I would provide any documentation that you have. And then I would say, if the company's going further and the deals are looking more promising, and that's a sticking point, you can always do more work there. Of course, you should always make sure that if you've raised money in the past, it's on you to make sure that you're doing that appropriately. Talk to a lawyer if you want to, but I can talk about my experience. I've invested in a few things, very minor things, like through AngelNV and a few other groups. And when they ask me, it's usually a self-attestation. Are you an accredited investor? This is what it means. And I say yes, and then they take my money. So it's not like the standard practice I've seen with a number of companies. It's not like they're, as an investor, they're not doing a particularly deep dive in my background for me to put in an angel check into a company. Yes, Sal, you have a question? Sorry, Maggie.
I was just going to say, for angel group, self-attestation is probably what's usually done. For a bigger venture capital firm, if you're going to be an investor in that, they will ask for actual proof, as I mentioned before.
Yeah, Sal, if you have a question, speak up or just type it out. Or
Great,
yeah.
Thank you, Nathaniel. Can you guys hear me? I was having a little internet issues here on my end. Can you guys hear me fine? Thanks, Maggie. How you doing? Quick question. Just going back to the due diligence. I am in the midst of finishing up the final stages of my own personal first business memoir book. It's called the Edison Unicorn, small plug. And I'm wondering, I didn't think about it as I was doing this, but how much of an asset is having some sort of business related book that might share? I don't have a felony or anything like that, but I do have a colorful story I like to share. And I guess wondering if someone does have a colorful story, would that be advantageous for them to maybe kind of be preemptive and maybe write a business related book or a blog or something that kind of puts those things out there even before you fill out or get to the point of due diligence in a way to kind of steal the thunder?
Awesome. Actually, that's a really good point. I think I could got this. Um, so this actually let's look at the questions. I'll get back to you in a second. Just gonna loop back. Um, let's look at the questions here that Maggie's got on the screen, right? These top questions are like, what are the top 2 or 3 special attributes of each management team member? Describe the experience of each team member in, building companies, fundraising, so on and so forth, right? These questions, I think, when you're filling out things like this, you have to learn to put the hat on of what the investor is thinking about and what you need to do to get that investor to say yes, right? This is ultimately just a sales process, right? And to be clear, that does not mean you never not, we just discussed earlier, disclose relevant stuff. What they're really trying to figure out here is what in my mind I call it like a founder market fit. What makes so even if I fall in love with the business and I think, I actually there was one last year, Josh, the bumper people. There were 3 or 4 or more of us investors in the room, absolutely in love with this business model, thinking this thing could make tons of money in like no time at all. But one of the things that we noticed just by talking to the founders is they weren't as excited about their own business opportunity as we were. And they didn't necessarily have the relevant experience. Like, unfortunately, there was an advertising, it was in the advertising space. But the main founder, I don't know the rest, I can't remember the rest of the team, but the main founder didn't necessarily have any background selling advertising. So what we're trying to figure out in this first section is what makes you the right person for this industry. What makes you going to, if I give you money, why should I give you money? What's about you is going to be successful? And and unfortunately, building a business involves having tons of skill sets. Like it lists here, you probably have to raise money. Given that most VCs want you to sell at some point within like 5 to 8 years, do you have any experience selling a business? Do you know the market? So on and so forth. And so as you're answering these questions, you just keep in mind, what narrative are you going to tell that points out that you're the best person? And don't be afraid if you don't have all the answers. Very few people, I would imagine, going through AngelNV will have tons of experience building and selling super successful startups. Because honestly, the people who have tons of experience building and selling super successful startups aren't going to apply to AngelNV. I'm sure there'll be exceptions. I'm sorry, Maggie. But it's okay to not be, Jeff Bezos or whoever you look up to, right? But do think about how you can connect what you're doing with your business. So to get back to your question, Sal, on the book, I mean, obviously building and writing and selling a book shows certain skill sets, right? Especially if that book is successful. Like if that book goes out there and has like 5 copies sold, might not be the most relevant thing ever. But if you've like Times bestseller, that's super relevant. Well, that's super interesting. My next point is, can you make it relevant, right? If you, for example, if your business was all about, I don't know, um, I don't know, how to walk dogs. I'm going to build an app that teach people how to walk dogs. And you say, I'm also the Times bestseller on how to walk dogs by Sal Johnson. Well, that's a super relevant fact that I would definitely connect. If you've got a book about, the 1, 2, 3s of business, but you're actually trying to do, Formula One racing startup, it's not so relevant. It just might not be one of the top 3 things that make you especially suited for this business. So think of it less of what you need to do. Think of it more on how you're going to sell yourself. Awesome.
Awesome.
So the
Thank you
next
so much for that. Thank you.
Thank you. And by the way, no one's got their camera on, so I can't read anyone's emotions. So, don't be afraid to say you like things or you dislike things. I don't know if half of you are asleep. If so, I'd like to join you, but no. So the next set of questions from Maggie here, next set of questions in the due diligence document, this is starting to go a little bit away from, standard stuff that I think everyone could probably answer to, a little more specific. So what is it? Does the company have an option plan? a typical option plan that a lot of startups will have is 10 to 20% of the company set aside for early employees. And why the investor is asking for this is a couple of questions. One, the investor is trying to figure out whether or not you have thought about how you're going to build your team and how you're going to compensate that team, right? If you don't have an option pool, how are you going to acquire and attract the right kind of talent? If your option pool is too big, well, then that represents all kinds of problems. That's out of the ordinary. And one thing you'll learn about investors is anything out of the ordinary raises red flags because they like stuff that they've seen before. They don't like stuff they haven't seen before. So if you had like 50% of your company be an option pool, super generous of you. I'd like to go work for you. But investors might be like, okay, what's going on here? This is weird. Another thing here, and I'm going to give away a trick of the trade. If you have already set up an option pool and then the investor invests, there's a really good chance that they're not going to get diluted by that option pool, right? Which basically means if you've got like a 20% of your company set an option pool and 8% to the founders, and then the investor comes in and they get, 20% of the company, they get 20% of the company, and the founders will then have, I don't know, 70%, 60% of the company, and the option pool would also go down to like, I don't know, 16% or something, right? Those guys would get diluted, not the investor. If you don't have an option pool, one of the things that a lot of investors will be worried is as soon as they come and invest, 10 minutes later or 6 months later on the next raise, you're going to have to set up that option pool, and they are going to be diluted. Again, I'm not here to go through all the pros and cons on option pools and how to set them up. I'm sure they'll, talk to a lawyer or do some research, but that's what these investors will be thinking about when they're asking these questions. So they're trying to understand. Yeah, they're trying to understand.
And they may make you actually set up your option pool before they will invest so that they don't get diluted.
Exactly. But then all these questions are just questions, so 8 is, do you have one? 9 is, are you planning on changing it? Which obviously, connects to that. 10 is, is there any specific breakdown between management and employees? What's left? Because you could have an option pool and already use a lot of it. Like you could have a 10% option pool, but have already used 8% to get in your, get in a couple executives or something early on, or a couple really important stakeholder employees really early on, so you don't have a lot left. Vesting, again, every investor is different, but what I've seen is there's a very typical, they call it the 4-1, I think, vesting schedule, which is it takes you you invested 1 month at a time. So if you have 25% of your, let's say you have 40% of the company in investing, just for simplicity, it will invest over 4 years. For the first year, you won't get anything until you hit the 1-year cliff, is what they call it. So if you quit after 9 months, you get nothing. Once you quit, if you quit after 12 months and I don't know, a day, you get 1 year's worth of your options. And then for the next 3 years, it vests at 1 month at a time. So it's the sort of very traditional 4-1 vesting period. I've seen that happen a lot. It's something that investors are very comfortable with and they're very used to. I'll give you an example. When I started Henry, we didn't really have an option pool, but both founders owned, significant, owned the company, all of it. And then we got the investor. The investor put us on vesting schedules, as just asked us to go on vesting schedules just as good practice, so that if one of us quit after a certain period of time, we would, they would be able to not have a whole bunch of equity go to someone who's no longer part of the company. So these vesting schedules are super common for option pools, but they're also super common for founders. And this is actually one of the few things that I would recommend. A, definitely, getting some advice on this, including up to, a lawyer. B, setting this up regardless if you do the due diligence, regardless of whether or not you get investment. If you're going to go in business with someone else and they're going to own shares in the company and you're going to own shares in the company, it makes a lot of sense for people to at least consider strongly vesting schedules, because it does help prevent situations where 6 or 9 months into a company, or even 2 years into a company, one or more people are disinterested or not working out or no longer want to be part of the company. The vesting schedule helps make those situations a little bit easier to manage. Ron makes a comment about a single trigger, at least having at least a single trigger on the vesting schedule. John, Ron, do you want to explain your thoughts to the group?
Sure. So thanks, Nathaniel. So vesting schedules are important to give the investors a some warm and fuzzy around you sticking around. But then the flip side on you is what happens if you get fired. If you know it, like let's say you're in a position where you know, now there's board seats, and you get you know, you get in a situation where your job is on the line. Triggers allow your vesting to accelerate. In other words, you know, if there's no malfeasance, if you're not getting fired for, you know, a bad reason, then all of your shares could come, you know, could vest and come back to you. So there's single trigger and there's double trigger, and there's like different mechanisms for that to kick in. But I just wanted to throw that out there to so that you make sure, you know, you have some amount of protection, especially if you get renegotiated into if they restart a vesting schedule. So, you know, if you own the company for, you know, 3 years and you only have 1 year left on your vesting, and now an investor wants you to restart it and start back at 4 years or 3 years or something, just make sure you have a little bit of protection for yourself.
Yeah, and exactly. There's I can't remember it's been a while to look at the details. There's single trigger, there's double trigger, there's a whole bunch of different ways those are, or there's a couple different patterns that those are set up. So thank you there, Ron. I would add, not just for the investors though. I sometimes like to get founders to think of themselves as an investor. You are investing a lot of your time, a lot of your money, potentially a lot of your effort into this business, and you anticipate getting compensated through stock. If you're not a founder, right? You might be amazing, but it sounds like you're not a founder, a consultant, an employee. I don't know what you are if it's not stock. As should be your predominant compensation. Like the employee, you know, you want to get paid, yes, but the stock is really why you do this. So you need to protect yourself just as much as an investor wants to protect themselves. This is one of the few areas where I'd really encourage people to set it up at the beginning, or at the very least get legal advice for their situation and how to do it. One thing that goes beyond this, so I'm going to mention this and then stop. One thing I've seen that doesn't get covered often is once you get to like a priced round, so once you actually do a price round, you usually get a whole bunch of terminology and a whole bunch of legal corporate stuff comes in that you usually kind of skip, or you do it in a much smaller way earlier on. Once you do a priced round, make sure that you really carefully consider how the voting rights and the board structure and their vesting all work together. Because there can be little gotchas in there where it's like, well, you keep on vesting, except the board can remove you anytime. They need to go and ask, well, okay, if I'm going to keep on vesting, I need to be a part of the company. Who's on that board? And then the question is, well, how could someone change that board? So you have to go look at the voting rights. But that's a detailed discussion for once you're closer to raising money. Going back to the questions. So all these questions here, so we've gone over the option pool. We've gone over vesting schedules. The rest of this is just really the company, really the investors trying to figure out who's controlling the company, who's really the decision maker, what's going on. I would expect that most of us are probably early stage startups, so hopefully the board of directors is just the founding team, whoever they are. Like if it's one founder, they'll be the board. If it's two founders, I expect them to be a board. If you've done like maybe a seed raise, but a small seed raise, maybe you gave away a board seat. My biggest advice here is just try to keep it as simple as possible. The more unusual this gets, especially, you know, at this stage, the more questions investors are going to have. I doubt most, I could be wrong, but I suspect for like pre-seed, seed stage investors, they typically don't see complicated boards because they're typically investing in really early stage startups that haven't done that stuff yet. Series C, B, whatever investors, that they expect to have a complicated board at that point, but that's beyond what I'd expect to come through this program. And yeah, So does the management have the control of the board of directors? The answer for most people would be yes. It'll be me and my co-founder are both the board and we're management, right? You can wear two hats. That's what it's asking. If the answer is no, you're going to have a really good narrative about that. And you're going to have to explain, like, you're probably going to have to get, like, if someone else controls the board for some reason, that's going to be something you have to explain because investors are going to be asking, who am I even doing a deal with? Whoever controls the board controls the company. At least that's what I've heard. Got that. Board observer rights. Again, by the way, all this stuff, please go get legal advice. I'm not your lawyer. I'm not a lawyer. Definitely not a lawyer. I find board observer rights pretty easy to offer up early on. It gives the investor, especially when it's like a lead investor or something, if you want to give them that instead of a board seat and they buy it, that gives them the ability to see everything that's going on, see the board meetings, participate and help out, but they don't have any control. So I actually quite like board observer rights because it's much less, you're giving much less power away than if you give an actual board seat. How are the board directors compensated? This is just detail stuff. Just quickly speaking, some people offer them equity. We actually got lucky. We just offered ours cash. We managed to get some board directors who work for cash, and that was great. But I think typically equity, though, again, the more you can avoid giving away equity and avoid making things complicated at early stage, the just easier it is. Easier it is because it's less work for the investor to think about. Same for advisors. So Ron asked a really good question. When is the right time to offer board seats? This is one of those areas where everyone is going to have a lot of different opinions. Let me put it this way. When you do your first major raise, especially your first like price raise, your lead investor is almost certainly going to want a board seat. It's from what I've heard. And I don't think you're going to be able to avoid that. And that's not a bad thing. I believe that the way it's because I don't work for StartUpNV or FundNV or any of these things. I'm just I like them, I help out, but I'm not a representative of them. I believe that they're going to want a little more control. This is a little more of a cautious group. Maggie, do you have any thoughts on board seats and when's the right time to offer them?
Well, they're going to ask. If you don't offer, they're going to ask for it. And it's usually when they're making a significant investment. It's not before. And it's not usual with angels, especially if they're just coming in on the cap table at a 25K or whatever. But if you're getting a substantial investment, they're going to ask for it. It's just going to be part of the deal.
And hopefully you're choosing great investors that can add a lot of strategic value as well. So it's hopefully a value add that you're getting a lot of capital as well as them, invested in the board directions as well.
Yeah. So at Henry, we had one board member that wasn't founders. So we didn't raise any, like we did a pre-seed and a seed and then we bootstrapped. So we didn't raise any funds later. So I'm a little less experienced in what happens in the Series A, Series B, Series C, Series D. Because we just skipped those steps you just do. It makes it a little harder. But what I will say is do not give away board seats lightly or easily. Though you do not want to come into something like this and say, I have 5 angels, I have 5 board seats. No investor is going to like seeing that. And you might have to unwind some of that stuff before anyone will touch you, right? Do not make things complicated. But, for example, if you do win AngelNV 4 and you raise, $500,000 to $1 million in total, right? Not all necessarily from the AngelNV, but like in total. And you're like now that's your seed or your Series A, depending on how you guys negotiate it. At that point, it might be the time where investors are going to want a board seat, right? So don't be afraid to give away a board seat when it's appropriate, when you are, and by the way, this is one of the areas that you will have a lawyer talk to you about, right? Like just do it. Like if you are getting a board member, have a lawyer because either it's a big enough amount of money and it's serious enough that you should have a lawyer and then you can ask them for their experience, or it's not enough money, don't give away a board seat. I'll give you that piece of advice straight away. It's very easy. And at that point, you'll have a paid expert that you can refer to. I will say having the right investor board member can be really helpful, right? whether the investor themselves goes on that board or they work with you to nominate someone on their behalf, you find someone that complements your team. For most teams, you're inexperienced. Most teams, this is the first time you're building a business, or if you built a business, you're relatively you've not had huge successes, right? You may have built a small successful business, but you've not built $1 billion unicorn. That board seat is actually a really good opportunity to bring someone in to the company who's super experienced and can really help guide and have a really good discussion with you guys. The flip side is I've heard it described, and I think it's relatively true in our experience, it's like marriage or worse. So this is not a flippant decision. Once they're on the board, they have a lot of control with you guys, or completely, depending how you organize it. And you can't get rid of them. Yeah, so you can't get rid of them easily. You're going to be having discussions with them. You're going to have to work through disagreements. And that's the point of the board. There is going to be different opinions. So it can, like, I don't want people to be afraid to get board members, but you do not do it flippantly. You do it when you have to. It's one of the most valuable things you can give away as a board seat. Do not do it lightly, and make sure that when you give it up, you're getting some, like, not only the money and the experience, all that, but the person coming in onto that board seat is someone that you think is going to help guide your business to success, in conjunction with you as the founding team. So it sounds like Maggie says that they typically not looking for a board seat, just want to know that it's not all founders. Yeah, so they might, in that case, and Maggie says that the ideal setup for AngelNV is 2 founders, 2 board members from investors, and 1 independent. And that just, you think about the power dynamics there. If the founders and investors agree, the independent has basically no relevant say. But if there was ever a situation where like the 2 founders and 2 investors completely deadlocked each other, you would have a truly independent board member to break that deadlock. It's really important. In my understanding, again, get your lawyers. It is really important to have like an odd number of people. You want to have a board that even when disagreements happen, there is never a deadlock. Because if the company's deadlocked at the board level, that can often be worse than a bad decision. Cool. I hope people here are thinking about boards now. It's great. Moving on. Are members of the management team willing to provide references and social security numbers for credit and background checks? I don't know. I've never actually been asked that one. Does anyone here have any thoughts on that? I mean, obviously, I'm usually pretty willing to do that, but also you're giving away a lot of personal information. So I would do it. Like, I definitely wouldn't do it if someone wasn't serious about investing. Let's put it that way. Just as like, it's not like you shouldn't be handing that stuff willy-nilly. I don't know if AngelNV has any opinions on this.
Yeah, so I would say that question is framed specifically to say, is the management team willing? So that at the point of, okay, we're making an investment decision, we want to know that you would be willing to or not something that's expected from all companies applying in the early stages, right? It's just, we want the yes, that if we were getting to the point where we were signing terms and getting ready to invest, that you would be open to a background check for your executive team.
Yeah. I mean, that's just, I think that's probably just an example of something that this particular investor is asking for. Other investors might not ask for it. It seems reasonable enough to me. That's something for you to make a decision yourselves. But ultimately, as a startup, you have to want to work with the investors, right? And vice versa. So in this case, if it was me and it was my startup, I'd say yes, because I think that's reasonable enough, especially if we're talking about a point when they're serious. If I went to some random website online and they asked a background check before they even talk to me, I'd say no. So use your discretion. Does the company have liability, key man, and directors/officers insurance policies in place? So I think the answer for most people here, well, what I imagine most people is probably no. Once your business becomes an actual business and it's not just and for some of you might have that, right? If your business is more than a triviality, right? Like if you're actually making revenue, if the business is probably worth something, I would recommend probably talking to an insurance broker and seeing if these kinds of policies make sense. And I always remind you guys, you can always talk to your lawyer as well. I imagine this is just something that the agency just, again, it's just more information for the investors. This is not something I'd spend a lot of time on. If you don't have these things and they're not particularly relevant to you, I would just say I'd be willing to purchase these things. and move on with my life and make something else in my pitch better. I don't think most investors will, particularly at early stage, will care whether or not you have them, as long as that you're willing to work with them, should it be something that they care about. And then, yeah, of course, conflicts of interest. They want to know that they don't have any conflicts of interest, or at least they're disclosed. So if you have someone in your company, let's say you hired me or even had me as a consultant as the company, obviously AngelNV is going to want to know that, so that they can make sure that they're not getting a conflict of interest, and that I'm not sort of weighting the scale in a way that's not been properly disclosed. So very basic stuff. No one's going to be upset. In fact, it might be a good thing for you to have AngelNV members involved with the company. What wouldn't be good is not disclosing that. So very basic stuff. Corporate terms, who's a legal counsel. It's actually not that hard to get a lawyer. Google it. Google good startup lawyers, good corporate lawyers. There are some lawyers around the group. I've not used them myself. There are always lawyers hanging around startup events, right? Because they always give free talks and they want to pick up some business. And the other thing is, you can always get more than one lawyer. You can always change your lawyers. So if you don't have a lawyer right now, or the lawyer you have right now isn't good at, negotiating startup deals, get a lawyer who's really good at negotiating startup deals, and have that person be the person who represents you for this. You can have more than one lawyer. Lawyers aren't cheap, but one thing I've learned in the past, and it's a little bit hard, but sometimes the more expensive lawyers are cheaper. I've had $400 an hour lawyers who took a long time to answer a question and gave us advice that was bad or wrong. And one of them, in my opinion, this is purely my opinion, right? I'm not throwing anyone under the bus, nearly scuppered an investment deal for us by giving advice that I think ultimately wasn't very useful. I've worked with other lawyers, like over $1,000 an hour kind of lawyers, who incredibly fast, incredibly professional, and they do this stuff day in, day out. And they ended up being faster, more accurate, and cheaper than a lot of other lawyers, even though their hourly rate was extraordinarily high. So you're not paying, when lawyers will always charge you per hour, but you're not buying an hour of their time, you're buying an outcome. So it's a little bit of an interesting place to navigate, but get one. Even if you just have one on retainer, just to have one on retainer, I think that's really important. I will say, it doesn't have to be the first thing that you do, right? That is something that if you left it closer to the point where you're actually doing negotiations, I wouldn't fault you for that personally. There's so much you have to do to get to the point where the company that matters, right? Get revenue, do a pitch deck, get them to actually want to give you money. Like, do those things first, or at least you can do those things first. But especially before you ever accept a large check or something, get yourself a lawyer, how to review things. Who will be representing the company for the purpose of the term sheet negotiations? That should be your CEO, most typically, potentially a CFO or something like that if you've split it up that way. What is your company's corporate structure? Vast majority of investors that I've talked to, in my experience, want you to be a Delaware C Corp. Some groups will have slight exceptions, like groups based in Nevada might be okay with Nevada C Corp instead of a Delaware C Corp. It's just one of those things where it's what everyone's used to, and that saves everyone a lot of time because they're used to it. Here, it's only asking you to disclose what you're doing today, and if you're willing to convert to a C Corp. So no one's asking you to change from an LLC or whatever to a C Corp to do the due diligence. We're just asking that if you were to get to the point where there was their own offer on the table, they'd be willing to do that. So don't overthink it. But if you do want to raise money, you're probably going to have a lot more success as a C Corp. Delaware is very sexy. And don't trust me, trust your lawyer. And yeah, please. Maggie?
I put in the chat that we're definitely okay with Nevada C Corps, as we should be. The reason that so many people go to a Delaware C Corp is because they have this whole chancery court system that is just for corporate law. So they have a ton of precedents around corporate law. So it's very well understood by all investors what's going to happen in the state of Delaware. Nevada has very friendly terms for C corporations. It does not have a separate court system for corporations and corporate law, and it doesn't have as much settled case law.
Yeah. This is, at the beginning, I said there's like nothing that anyone ever agrees on. The
This
one
is
thing
what
that
it
I've
is.
heard pretty much universally agreed on is Delaware C Corps are good, right? At least for startups trying to raise money, right? So every time I've ever heard a lawyer give a talk or anyone like within the US give a talk, they seem to like that. Of course, there is always going to be some exception. Someone out there is going to have some really weird business model where that doesn't make sense, but um,
Or your
that
Elon Musk in Delaware.
you see, yeah, Elon Musk moved out of Delaware, but he did that once he was already successful. So once you have an army of lawyers, and then you can do whatever you want. I don't care at that point. Um, uh, I'm going to throw this question to Maggie just really quickly. I know that AngelNV is very, very open to Nevada C Corp, which makes a lot of sense. Has there ever been any issues with other investors down the line not liking that? Like you do a Nevada C Corp, you get AngelNV's investment, everything's great, and then you're doing a Series B, and there's a big California investor, and they just don't like Nevada because they just don't know it.
Well, we haven't been around long enough for our companies to have B round investment. So I don't know.
Well, fair enough. Yeah, but but just I think we've covered that one to death. And if you want more advice, ask around, talk to a lawyer. It's Google it. This stuff is well covered online. It's one that very easy. And then have all tax returns been filed properly. It's nice to know that you guys are on top of your taxes. That'd be really helpful. Don't want to have the IRS chasing up your company. But if for some reason you haven't disclosed it, it's not going to be better to not disclose it. They ask the question, disclose it. Have a really good story about why and how you're fixing it. It's probably be my advice. But I could imagine if it's like it's been this LLC for a few years and now it's some new opportunities popped up and it's now ready to become a scalable startup and there could be a story there. If you've got something more complicated like that, you probably really should have a lawyer helping you think about A, how to solve that, and B, how to talk about it. So hopefully it's pretty straightforward. Company growth, Maggie, do you want to cover this? Or does this start covering other sections?
We wanted you to cover financial. So,
yeah.
But this corporate stuff is, let's just finish with this. I think. Let me see how, because there is a ton of financial stuff. Okay. Requested corporate due diligence stuff.
Yeah.
This is what takes a lot of time. Yeah.
Yeah, this is going to eat up a lot of your time. My advice to you guys, especially, so these in the actual AngelNV thing, it is a process, right? You're meant to hand in everything that you possibly can, and then the team will work with you for more due diligence. Just give them what you have. You may not have all these things, right? If you've never done a press release, you don't have to include any press releases. Just say, don't have any press releases, right? So it seems like a lot, but a lot of it is just boilerplate. A lot of these is boilerplate agreements. Just be honest, include everything that you have. Oh wow, yeah, that's a lot. I'm scared if you keep on scrolling, it'll never end. But this is a lot of boilerplate stuff that you should have. If by the way, if someone here hasn't set up a company already, I recommend Clerky.com. They give you a whole bunch of good boilerplate legal stuff out of the gate. And when we then did a price round, the lawyers were very familiar with it and had no problems using Clerky's documentation. Thank you, Maggie. But yeah, I think put everything that you can in, think about it, but at the same time, don't over worry about it. If you don't have something because you've never done it before, that's okay. And the investors will happily work with you. That's a sticking point for them. I will just throw out there the org chart sounds really silly. Actually, really easy. At least I expect it is. It's usually just like a top-down tree view of here's the CEO, here's the people who report the CEO, and so on and so forth. They're actually super valuable. I like them. I thought they were silly until I did one for our company, and I was like, oh, it really helps understand the structure of who does what, who reports to who, those kinds of things. So that one you could probably put together pretty quickly if you don't have one today, especially if a small company. It's probably a handful of people, but it really does help think about the structure of your company. So I think that's something I'd recommend all startups doing.
Yeah, and I would say that asking for the formation documents was really eye-opening, especially last year with Tilt, which was a company that started in England and Wales and then came over here. And so before we were going to invest, because they would not be eligible for the match from state SSBCI if they were not a US corporation, if they were not headquartered here in Nevada. And so they had loaded up the British stuff, but they were still in process on the American stuff. And so we ended up having to hold the investment until they got that squared away. So a lot of just holding this boot camp is to educate our Nevada companies about what it is that we're going to be looking for. And if you think you're going to get investment, then you should know that, yeah, we want you to be a C corporation, whether it's Nevada or Delaware. You should know that you should have your headquarters listed here so that you're eligible for the match, because we're trying to build the ecosystem here. So we want you to get that match. And we want you to have the time to go out and get extra investors than just the AngelNV group so that the match can be bigger. The match is not limited to what the AngelNV group does. If you come in and say, okay, we're going to set up a separate SPV because we have these other investors that we've been holding to wait, then that investment is eligible for the match as well. So the second place company last year's incentive, they actually got $1 million investment, even though the amount that was from AngelNV itself was $90,000. So it would have been matched for 180, but they got all the way to $1 million. So
Agreed.
Yeah.
One of the things I'll tell people is, I'll be completely honest, this is one of the most, I never did due diligence this bad. Like, this is a fairly exhaustive due diligence list. It's the way AngelNV likes doing things. It is definitely more on the onerous side, but the flip side of that is it does give you a much better idea of what due diligence down the line is going to look like. And if you pass this due diligence and you get investment, it's a huge sign of confidence for follow-on investors, because they know the amount of work that's been done, both by AngelNV and, you know, the angels and all that, but also by you as a founding team. And it shows that you really understand and your business and you understand what you're doing. And that gives a lot of confidence, because quite frankly, a lot of people don't. In fact, you know, yeah, like you just haven't until you've done something like this.
It is onerous,
Victoria?
but one of the reasons that it is onerous is because we are teaching investors how to invest, and we don't want to gloss over it for them. If we did, then they would come back to us as like, well, why didn't you tell us that we needed all of their prior investment information? It's like, well, yeah, it was in there. Maybe they didn't give it to us, and maybe we kind of overlooked it. But this is everything you should be asking for, even if we don't get it.
Yeah, to be clear, I by no means am I saying it's a bad thing. I'm just giving people a heads up. I recognize I'm with you guys, but it's also really valuable, and there's a lot of value in doing it. And it teaches people a lot of things, and that's how you build a business.
So Victoria, you have your hand up. Go ahead, Victoria.
Yes, I wanted you to go over the match again. I didn't quite understand fully your explanation of it.
Oh, okay. So the state of Nevada, through the U.S. Treasury Department, has the Small State Business Credit Initiative matching funds for investments that are made in the state located in the state companies. So Nevada companies, if they get investment from a group that has done due diligence, then we can submit that to the state and they will match. We actually have a contract that they will match our stuff. So they will match up to $500,000.
Does the investment have to come from only Nevada investors, or
the company has to be set up in Nevada?
Okay.
But the investors don't necessarily have to be from Nevada. But they have to have completed due diligence, because the group that's doing the match, they don't have a staff to do due diligence.
Okay. So they go through AngelNV, and if they get selected to AngelNV and does AngelNV's due diligence, that's when they qualify for the match.
Well, somebody has to have invested in them as well.
Okay.
So it's not just the exercise of going through due diligence. There has to be an investment to match.
Okay. Thank you.
Mm-hmm. Somebody else have a question?
Maggie, I'm sorry. I had a question. I was trying to find how to raise my hand. I couldn't see it on my screen. Sorry about that. I'm multitasking here, guys. So Maggie, quick question, because Nathaniel, that's a very interesting point you brought up. So Maggie, would you basically say that, what is being done here with AngelNV and due diligence, this is preparing not only just investors, for, the ultimate level of, angel investor, but would it also be safe to say that it's preparing us as potential founders, and maybe even say, if we can go through this, like Nathaniel was saying, this is Sequoia level due diligence. This is, we can pretty much go to the top of whatever, level of VC that we're looking for, and knowing that this kind of prepared us to the utmost level. Is that safe to say?
It's not safe to say that this is Sequoia level, because they're going to have lawyers reading all of your documentation. We don't do that. We're just going to look at it, and we're not lawyers, so we're not going to pick it apart.
Well, no, you don't give yourself enough credit, Maggie. What I'm saying is not that part. Meaning, you're giving us basically the preparation. You're like the boot camp for us to say, if you're going to go to that level, this is as exhaustive as it'll probably get, so that you know that you're putting yourself in the best position to be presenting as much transparency as possible. Yeah,
hence
I'm complimenting
you. Due diligence boot camp. Yes, that is the name.
Yeah,
no, that's great. I mean, that's a wonderful thing to know. Thank you.
Yeah, and that's what I'll say is, the downside is the next time you do due diligence, good chance they'll have a different form and different questions, and you're going to have to do a bunch of work again. But the good news is, I mean, honestly, I don't think there's that many more things to ask about than what this group has asked about. So a lot of it will be, I've already got the documents, I've already done this once. I might have to reword it because the way they want to do things is different. They will ask slightly different questions. They won't ask your top three, things that make a member great. They might ask, what makes you unique and ready to go? It's like, it's the same thing worded differently. So I will say this, whether it's pitching or whether it's finding investors or when it's finding these things, it's a lot of work. But when you're running a business, guess what? You do these kinds of things all the time, and you have being able to solve this gives you the skill sets you need to solve other problems. Um, with Henry Meds, we needed to get payment processors, and because we were a telehealth company, you can't just use all your Stripe or your bank. Like, it's hard to get payment processors, and we had to have multiple. And every single time we went to a payment processor, we had to do their version of due diligence. And every payment processor has a different set of due diligence and different questions and different integrity, not integrity, but different levels of so on and so forth. So doing this here, you will find these skill sets used later. And then if you do later on raises, whether it's, you go to a different investor or like you're doing a Series A down the line or a Series B, my understanding is those things do get a lot more rigorous than your traditional seed and Series A, or seed and pre-seed rounds, your angel checks. So I think that what they're trying to do here at AngelNV, and I really do appreciate this, is they're trying to get your head around that. I don't think you'll be ready, but I think you'll be 80 to 90% of the way there versus 0% of the way there. And that's going to make it so much easier for you to take that next step as you do that to the next level of complexity. It also means you're going to have done it once. You'll get that out of your system. And that you can really focus on it, because so much of building and selling a business is all about story and messaging. And the problem is, it's really hard to come up with a good story and messaging while you're scrambling for documentation and trying to understand the problem. Once you've already got the documentation and you've done it once, the next time you do it, you can focus a lot more on the messaging of it because you understand what you're putting together. So it's just really good practice. And if as your business grows, you will find yourself doing stuff more like this. And we were lucky, we were B2C, but if you do B2B sales and you start doing larger B2B sales, companies start sending you entire checklists of things they want to do before they'll even work with you. So these skill sets become more and more used depending on where you grow.
Awesome.
Yeah. Maggie, should we? I'm looking at the time. Is this time? Do you want to go to the financials? Is this time to wrap up?
I was just going to go back through these questions that we didn't talk about. And so I think they're beginning to understand that we're trying to get a whole view of the company. And so these next few things on company growth and previous financing rounds and future financing needs, the exit plan, and the current deal terms, these are all things that we're really going to dig into.
Yeah.
Yeah.
So there are three kinds of things here. If you people stick around for the next few minutes, I think break these things into three categories. There's just the like pure due diligence kind of stuff where it's just like who's it like what's going on, right? There's the really, really basic stuff. Who are the controlling shareholders? How much capital is invested? That kind of stuff. It's basically just trying to make sure that we've ticked all the boxes. So that's the kind of first kind of thing that you should keep in your head. Some of these questions are just box ticking exercises that might raise a red flag, but aren't particularly like aren't no one expects to have a discussion about it. There's a second kind of question that they ask. In my mind, what the investor is trying to do is, do you understand the business? Do you understand what's going on? Like if you go to an investment and we talked about earlier, don't know about your option pool, you haven't done your research, right? If you don't know, um, you know, what kinds of companies get sold for in your space, and you don't know what your exit plan is, you don't understand your business, right? Um, so there's some of this is basic, some of this is just do you understand the terms, the game that's being played? Because you are playing this game. We want to know, and we're going to invest in you. We need to know that you understand what's going on. All of this is Googleable. You can learn about it. You can talk to lawyers. You can talk to other people. Pretty easy. For example, he's talking about preferred stock, convertible debt, all those kinds of things. It's a bunch of annoying terms, but you need to know these terms, right? You need to have opinions. Even if your opinion is, I don't like convertible debt because Y Combinator told me so. At least it's an opinion. Try to get it, try to get a little more detailed than that if you can. But there's also one section. I think some of these things like describe your exit plan. Mackie, can you go to the beginning of this section, the beginning of the financial section?
We're actually not even in the financial section yet. I think that's actually the last section.
Oh, wow. This is still the corporate stuff.
Yeah, I think we're going to have to do financial separately because it's a big section. This is marketing. All right. So now we're in the finance segment. So there's like 5 pages of this.
Yeah. Well, I can either go on for the next 2 hours, or in the interest of time, I'll give you my 2-minute summary. One of the biggest mistakes that I see with founders, and one of the biggest and I see that I'm talking about myself just as much as anyone else because I'm a software engineer, and software engineers like building things. Is that when you're building a startup, you are not building a product or a service or software or any of those things that you think you're building. You're building a business. And I hate saying that because we all want to go and focus on building, some software or whatever we do that we want to do, right? Maybe if you really like making candles, you want to make candles. When you're a founder, you're running a business. And finance is the lifeblood of your business. And really building and understanding even a super simple financial model of your business is one of the things that will really help clarify, make everything make sense. Being able to say, this month I'm going to make, I'm going to sell 10 candles. And then a month after that, I'm going to sell 12 candles. And what am I going to need to do to go from 10 candles to 12 candles? Am I going to have to hire a salesperson? Am I going to do this? I'm going to do that. Is one of the things that really, I think, separates people from being sort of dreamers and ideation phase to actually, I'm a competent business person here to make a business that's going to be very successful, make a lot of money, be able to return a lot of money to the investors. And because of that, you should invest in me today because I'm going to get you more money out of it than you put into it. So there's 5 pages of questions about that I don't have the time to get into this second, but that is something that I keep in mind. So keep in mind there are some questions here are just pure due diligence. Some questions are here are to show if you understand the terminology and really understand how the game is played. But ultimately, the last thing you need to demonstrate is you need to demonstrate that you understand your business and you understand the opportunity and you understand how this thing's going to make money and how it's going to work and how you're going to hire people and all those kinds of things. And it's called a financial model. And actually, you can build a really simple financial model in a Google Sheets pretty quickly. It's not a lot of you can get unlimitedly complex, but just start with something simple is a really good way of understanding your business. And I will shout out what were their names? TensorWave. There was a company that came through. I don't think it was an AngelNV company, but it was a StartUpNV company or something called TensorWave. And as soon as I saw their pitch, I just said, okay, I'm going to invest in them because they understood their financials really, really well, and they paint a really clear picture. You give us money today, and there is, X% chance that you're going to make a lot more money within 2 years. You may win, you may lose, but it was a really clear and obvious proposition because they really understood their business and they understood their financials, and I thought that was really impressive. Yeah, Maggie, over to you.
Okay, yeah. So this is daunting, but yes. And I don't know if you saw in the chat, folks, that we give this to you on the day that we announce that you're a finalist, and we expect you to give it back to us in a week because we need to start acting on the information you're giving us. We have to continue to proceed through the due diligence, and until we have this document, we don't have anything to go on. So it's a 27-page document with none of the answers filled in. When you start writing in here, it gets bloated. It can be 34 pages, but then we're going to end up making another 35-page due diligence report at the end. And some of it will be based on exactly what you have here in the due diligence questionnaire. And the rest of it's going to be based on our findings from discussing topics with the founders and the board members and your customers. And so it is a big deal, and it does take 5 weeks. And that's with a bunch of people working really hard on it. We're just hoping that by going through this boot camp that you understand that it's going to be a daunting task, and that the more information you give us here, the easier it is going to be for us to complete that due diligence report and take you all the way to the end. We've done it 4 times, and in each one of the 4 times, at least 2 companies get dropped from due diligence fairly early on because we find a fatal flaw. Now, you may have the fatal flaw. You should disclose it up front if you know what it is. But the due diligence just falls off when we realize that there's no way that we can make an investment. And the good news is that the angels that were on the teams of the companies that drop are able to refocus on a company that has a better chance of getting the investment. Was that fear mongering there?
And a really quick one step for everyone here, if you're currently in the process of if you have a startup, right? Set up for me, it's Google Drive, whatever storage solution you like that's cloud backed up, ideally, though make up your own mind. Start storing all your documents in a central place that's protected. Only you and maybe your founder and lawyer should have access, maybe your accountant. Start storing all your documents because it doesn't stop. And if you're like, oh, I have all these documents in this one central location, that will save you a lot of time because 35 pages sounds like a lot. But if you have all your if you have every piece of relevant documentation ready to go, and you should, and it doesn't take that long to get it done the first time, and just go through your emails, you'll have it there. Set that up. And then it's just answering questions. And you shouldn't overdo this or make Maggie upset, but a lot of the questions will be no, because these questions cover so much, there will be a bunch of questions that just aren't relevant for your stage or your stage of your business or the industry that you're in or something like that. So always try to answer questions to the best of your ability, and a lot of them will be relevant, but some of them there'll be a page of stuff you're like, how many prior investors do you have? If you have no prior investors, that's a really easy page to fill out. If you have investors over the last 2 or 3 years, you've had falling outs, that's going to take you a lot longer. So it's kind of up to you and your business, but not every page will be relevant to you. Yeah. Maggie, I'm assuming that we share this document with everyone as part of this group?
Mm-hmm. Yes.
So this also gives you guys a really good heads up on how to structure all that stuff going forward, whether or not you go through AngelNV4, whether or not you're ready, so on and so forth. This will give you a huge heads up in any future investment or any future due diligence, which can be not investments, right? Sometimes you take aspects of this will be used for other things like applying for banks or loans or things like that. So it's a good skill set to have.
Yeah. So we actually set you guys up with a shared vault that we use through Google, and it's broken into 4 different folders, and that's like corporate and financial and sales and marketing and product and technology, IP, all of that stuff goes together. And I forget what the last segment is. Maybe we separate out finance because there's usually a lot of finance documents, and the finance, the number wonks just want to go in there and plug around. Yeah. So as Nathaniel said, you want either a drive or some secure thing. You can still use, is it DocSend? I think so. They have a way of sharing. Maybe I'm wrong. What's the name of that
Fox?
group? It used to be
Fox?
DocSend that I'm thinking of. You're saying Fox?
I was saying box.
No.
I'm not sure if they were DocSend for data.
Data room. Yeah, it is DocSend. It's not Box. DocSend is a service that provides data rooms for founders, and then you can track everybody who's looking at your stuff. And you can share it with specific people. There's different layers of security for it. So you could open the corporate file for people and not financial file until they get to a certain level. So DocSend provides that service, but you can have your own, Google Drive where you're keeping track of things in one location. It makes it so much easier to upload or to share with other people.
Yeah, I'll throw one thing. I'm sorry, it's going on a little bit long, people, but one thing I will throw out there, because we have implied it, but we haven't stated it. You don't have to provide everything to anyone who asks, right? As an for an early stage company, usually you don't really have that much to protect, right? You just don't. Like, your financials as an early stage company actually don't, like, there's nothing really that protected or anything about them. But just because you should store all your documents in a single location, that can be structured with folders or whatever. Well, use this product. I've not used it, but it looks good to me. Just don't give anyone who emails you all your company information, right? And to Maggie's point, even when you're working with someone more seriously, there may be waves of information. You may give them the sort of more concise version, like a pitch deck and a few couple spoil documents at the beginning. And then as they get more serious, you give them more information. It helps you control the narrative, right? It gives them a reason. If you're like reaching out to investors cold, gives them a reason to talk to you. Oh, they like the teaser. Now they want the full deck. Or they want the full deck, now they want the financials. It gives them a reason to keep on talking to you, and you have more touch points. But also just protect your company's information. And not every due diligence has the same requirements. The due diligence for a loan is not the same as due diligence for an accelerator, which is not the same as a due diligence for a lease. You don't send people information that they don't need. Send them the relevant information within that set of documents that you maintain.
Very good point. I'm also going to share that with our application for each step that you progress. If you apply for AngelNV and you're just in the big pool, and then you get to the round of 3-minute pitches, there may be a few more requirements that we're asking for. And certainly when you get to the finalist stage, there is all of this other stuff. But between the 3-minute pitch, there's the 10-minute pitch. And so there are a few more requirements there. So we're not trying to ask for everything up front either. Don't give everything up front. And then as we go down the pipeline, then there are more requirements.
And focus your priorities. You have limited time, you have limited energy. This is going to sound a little weird because we're doing the whole due diligence thing. Due diligence is never going to win you a deal. It may, not having your due diligence done will cost you a deal, no problem about that, but it's not going to win you a deal. If you don't have a good business, if you don't have a good founding team, if you don't have a good pitch, you're not going to get to the point where the due diligence matters. But also, you can do all that work and then not have the due diligence and then fail. I know that seems like really unfair, but so is life. Figuring out the right balance of how much time to put into due diligence, how much time to put into the pitch, how much time to put into actually building your business, talking to your customers, all those kinds of things. That is the balancing act that is being a founder.
Amen. All right, any questions?
Just thank you guys. Great job.
You're welcome. Thank you. Thanks for joining us. Okay, so
and
we'll
a shout out to everyone a quick shout out to everyone who participated and helped share some of their experience and expertise. It's a community. There's, I'm just happy to help out today, but I'm not an expert in all things. We've had, Borna, thank you for helping out. Ron, thank you for helping out. And anyone else who helped out in the chats. It's really good to have a community of people helping each other.
Yes, it's really fun that we see the ecosystem being built through everybody helping each other. All right, we will send out the recap on Friday. It'll have a link to this recording of tonight's session. It will probably include, again, the DD questionnaire, which I believe you've already gotten, and any other assets that we might find. And Madeline reiterates the need for you guys to have the Venture Deals book and to read it more than once.
Additionally, I'll send y'all an email tonight with an invite. We have a session this Friday evening, 5:30 p.m. at WeWork Town Square. It's a free session where we will have Ron Weissman, who's the chair of the Angel Capital Association and been an investor for decades in a variety of tech companies. He's also the software chair for the Band of Angels, but he'll be coming out and doing a session. So we'd love to have Angel DD boot campers come and join us. We'll have drinks and food. So keep an eye out for that email and hope you can join us Friday.